This past week I created a video where I mentioned the existence of share price manipulation in the US stock market. On that same video I referred to the examples of rumors, buyouts of companies such as Twitter, Yelp, Salesforce, and also important announcements in Herbalife ahead of earnings. And today I'm going to discuss in detail the case of Yelp. I'm going to prove that we knew that something quite strange it was happening on the previous day ahead of the announcement, which happened on Thursday, the following day, and therefore watch the following video, and then I come back with comments with regards to this activity in. When I said this past week that I was 100% certain manipulation on Yelp share price, we informed subscribers about that on Wednesday, and these 24 hours ahead of the announcement of a potential buyout, you have here the message conversation on Yelp with my colleague informing I reduced my short position in Yelp at $38. The next day, the shares they traded up to $39.30, more or less, ahead of the announcement. And this confirms that 24 hours by studying, looking at the tape, I knew that something was going to happen. I didn't know exactly what was going to be the announcement, but I knew about the manipulation of share price in Yelp, and we informed subscribers about it 24 hours in advance. This confirms our competitive advantage and also the existence of illegal activity in the US stock market, in particular in Yelp, since I'm an expert on reading the tape and I could see this coming through. So you have just seen that I knew about some very unusual activity on shares of Yelp, and obviously you might have a question. How did we spot this manipulation? By looking at the tape. I believe that there are less than 5 or 3 persons in the world we could eventually read this on the tape. I'm one of them, and I've been doing this for more than 25 years, or since the tape exists, in fact. Since 25 years ago, the tape didn't exist. I'm going to discuss in detail the case of Yelp. However, I'm going to make some further comments regarding the other cases that I discussed this week and the previous week, the case of Salesforce, issuing a free stock tweet on the day that shares they spiked to $78. I knew that Microsoft it was not going to acquire Salesforce. Therefore, my stock tweet proves that those that they followed my advice, selling at $78, they sold shares at a very good price. Eventually, other candidate might come up. Nevertheless, that candidate, it is not in the market. No one knows who is the candidate, and that therefore it is a rumor so far. And when you have rumors, you have to sell shares at the top. And then if you are interested to play the rumor, eventually you can buy shares back after they sell or pull back significantly, because also your risk in the markets reduce substantially, since there is always a premium when these or after these announcements are made to the public. In the case of Twitter, the rumor, it was all about Google being interested to acquire this company. Google it was not ever to acquire Twitter, at least several weeks ago, ahead of earnings. That announcement it was not going ever to be made. The objective of the rumor it was to unload the shares on retail investors at the very top, ahead of earnings. The company was going to miss earnings, as I announced already in 2014. There was a leak of earnings also, and that is a very important and a serious, in my perspective, even that everyone is aware of. I don't think that is a mistake. It is a very serious. It was made with a very serious purpose, and so I'm quite frankly disappointed with this activity in the US stock market. Not because I'm losing money, it's precisely the opposite, and I can prove it because I made the call in Twitter, I made the call in Yelp, I made the call in Salesforce. So this is not about someone that has a position and it has been hurt because the position that has is a contrarian position against what happened in these companies or in Herbalife. It is precisely the opposite. I am talking about something that I know that you know something that I know very well, and that I had the opportunity to alert people ahead of these events to do something about it. And so in the case of Yelp, and therefore everything that I've said so far, it is based on actual facts. Hereafter, it is fiction. It is for just for your information. So regarding this particular case of Yelp, I found this announcement of a potential buyout quite interesting. I'm not going here to speculate whether the buyout it is a eventual scenario or not. That I leave up to you. But let's assume that I'm an investment firm and my name is ABC, and eventually also I participated in Yelp IPO, and I've been buying shares since IPO at very high prices. I would say $70, $80, $90, and I'm losing a lot of money. And by losing a lot of money, I have to do something about it because Yelp, 1 week ago, announced one of the worst reports on Wall Street among tech companies. And so I know that the year after, when shares they are trading at $39, no one wants the shares. I'm not going to see ever again my money back. So I have to design a plan. How am I eventually going to get my money back? Well, but before I design a strategic plan, I have also to consider, and I know that in advance, that there are others pretty much like me. And when I say like me or I'm referring to the company ABC. I'm not referring to my person, because I had a long position in Yelp. I recommended to sell shares of this company at $92, and I downgraded that stock to strong sell on a long-term basis, as you find on the web on several case studies. We recorded all of them live trade calls. And so if I'm the company ABC, and again I repeat, eventually I participated in Yelp IPO, and I've been buying shares at very high prices, I have a problem. But at the same time, I know that others, they have the same problem. Because all of us, we have been upgrading to very high prices. And the suckers, they don't exist anymore. And so I decided to, design this plan, how I'm going to make my money back. And these news that they come out this week about the potential buyout, well, if I'm the company ABC, I don't think that, quite frankly, the CEO of Yelp is a very intelligent person. And so I would say that, again, a fiction story, I, as the company ABC, approach the CEO of this company and I tell him the truth. Look, you have been screwing Yelp since the very beginning. Your strategic moves, they proved that the only thing that you actually have been doing, it has been to erode the strategic advance that this company had since IPO. I've been supporting your company, shares of your company, but right now I have a very large loss. So we have to consider how we both are going to be out of this situation. And so I tell him about the plan. I know that others, they have the same problem. I know that by thinking or considering the company, to tell him, look, you are going to put the company for sale, or to announce that the company is for sale, and the rest is our work, because we know that others that they have an interest in Yelp, they are going to increase the price targets. Even those that they, a few days ago, they were cutting price targets because they were forced to after you reported one of the worst quarters in the tech sector in the US. They are going to increase the price targets because they don't have any other choice, and it's going to help them to recover their money because they also are losing millions of dollars. And so eventually the CEO of Yelp, the only thing that he has to say or to at this point is to agree, because there is no other option. He's not going to see his shares back to $70 or $80 based on fundamentals, other than on speculation. And so what you have seen this week is precisely after the announcement is made. Several Wall Street analysts, they came out reviewing again the price targets, some of them with new price targets announced a couple of days before. And based on what? Not fundamentals, not because the company is eventually going to recover, or the next earnings announcement that no one knows what they will say, but instead the buyout opportunity. So thereafter you have this list of 10 companies or 20 companies, and you have these 100 or 150 articles all over the web on several newspapers, websites, about informing the people, in general, investors, that Yelp, it is a certain case. And not only a certain case, as also the titles, they refer Yelp, and the probability to Yelp to be acquired to be 50% or higher, 60%. So this tells those speculators that Yelp, it is a certain case. A certain case buying shares at this price. Moreover, if I had to announce a plan or to make the plan happening, it will have to be right now. The timing, it had to be right now. And why? Because for a simple reason. Next year in 2016 is going to be by far more complicated to have a plan like this working, because by next year, eventually, the Federal Reserve might increase or not interest rates. In fact, they might decide to remain low for an unlimited period of time. But since I'm the company ABC and I don't want to incur in that risk, right now, with these market conditions and after favorable Federal Reserve announcement, the timing, it has to be now, because the probability to recover my money back, to recover my loss, it has to be now, because next year it will be by far more complicated. So the CEO of Yelp, the only thing that he has to say is, I agree, my company is for sale, and we are going to the rest, leave us to us, because we'll do the job that has to be done, and we'll find all the, we will create all the momentum necessary, and your company, in the end, this is a win-win situation for all parts, because your company will be on the news, you will be on the news as the creator of the timing to be perfect, and also, or the offer, and also your shares will be alive again once these news they are out. And this is exactly what happened the past days. Yelp, it was on the news for a couple of days for other reasons, and I'm referring to the very bad earnings report, but suddenly became on the news, or became the the most important company on the news about a buyout that no one knows in the end who is the candidate, the companies, and moreover, just to finalize, this individual, the CEO of this company, the only thing that has been doing for quite a while, it is to find enemies on some of other, eventually, in fact, suitors for Yelp. I'm referring to Google and others that, in fact, for example, the case of Facebook, Facebook, it is not, I would say, not interested to buy Yelp, because I think that they have service that they collide with this company. But nevertheless, Facebook and others, for example, I found interesting that also Alibaba came out as the potential buyer for Yelp. So in the end, you have this list of 10 candidates or 15 candidates, and you have also probabilities, that the probabilities to be quite high. And then you have on the second day of Momentum Day, you also have the upgrades by Wall Street, again based on this news, not fundamental news, proving that they were interested to have this to happen, okay? Because it was on their best interest, since they are losing millions of dollars in positions in Yelp, and upgrading shares and saying that eventually Yelp could be acquired by $85. So I would say that someone was going to buy Yelp. I had already bought the company before the rumor it was out. I would already have bought the company, I would say, no? And the other thing that I have to say as a professional investor is that I don't remember a case in the past, quite frankly, where a rumor materializes. So in most cases, I would say, I don't know, maybe 95 or 99% or even 100%, when someone decides to buy a company, for example, there was the news about the Kraft where Buffett was involved. Did you know about it? There was news about it. There were no news about it. No one knew about it, and it happened. All right, and I could refer here to many other examples. In Salesforce, they acquired not long ago a company, and also that company, no one knew about it. I'm referring to Enoch or so, and no one knew about it until it happened. So this to say what, that although people today they probably got used to these news, these rumors, and they like it to trade the rumors, the news. The fact is that the participant, when he trades or invests according to this news, is a gambler. He likes the thrill of gambling the markets, but this is not about serious trading or investment. This is all about gambling and taking advantage of a situation that it is present in the US stock market right now, because the market conditions are very favorable for this to happen. And again, this is also a direct result of these interest rates to be so low and everyone to be excited about these players. And this pretty much like it happened, in fact, more 20 years ago, 96, 99, this was quite common. Other situation that happened recently, it was with the case of Voltaire Corporation. Probably most of you, they are not aware of this American company. The shares, they zoomed to a price that was unreasonable, and we had to step in informing people when to sell shares of this company, and it was precisely at the top. And then the shares, they collapsed 70%. It was 21 all the way down to $8. All right, this happened in a matter of more or less 1 week. Clear example that we knew when to sell Voltaire shares that corresponded to the top. No one ever could inform or other market participant went to sell shares of this company at the very top, and then the crash followed because we knew that again a player was not going to continue rallying. Okay, so these opportunities, they are spotted on the tape in real time, live. It demonstrates the advantage that we have compared to others, but I'm not here to describe it. I'm here to explain that there is actually share price manipulation in the US stock market, and people are not doing anything about this. And it is amazing because in the end it is a win-win situation, it appears to be, for all parts. But I found it, quite frankly, to be not credible, and eventually in the mid to long term this is going to hurt, as it happened in the past. Is going to happen, is going to be eventually, I don't believe that is going to be revealed, but is going nevertheless to hurt, and it is already hurting the credibility of investors when people, young lads, they are afraid of participating in the US stock market. And this should be a concern to those that they are serious about investment in the market. They should have this objective of explaining to people that these things, they don't happen, that companies and ratings, they should be a sound reasoning to issue them, and not the news about potential buyouts that no one in the end knows about. Because if I have a strong buy rating in shares of Yelp and my upside is, for example, $66 or $70 or 85, or I do believe that the company, and I have inside information that the company, after reporting one of the worst earnings report, is going to dramatically change for whatever reason, or I have that information, or I believe in miracles, or I'm upgrading shares, precisely that is what is happening, based on a potential buyout. And to upgrade shares on a potential buyout that a few days ago also existed, and 1 week ago and 2 weeks ago, because the potential buyout, it can happen anytime. It is not the new. It is not the fact that the potential buyout or the news about this potential situation to happen, just to be on the news, does not make it different compared to what it was 2 or 3 weeks ago. Because the buyer or the potential buyer, 3 weeks ago, he was also available. What makes all the difference is the CEO of the company to say, I'm available for sale. I'm open for sale. I don't care about, I'm here to get rid of the project. And someone that gets rid of the project is precisely the opposite of, for example, Salesforce. I believe that has a major competitive advantage comparing to any other player, because it has been a project of a person, and thereafter a group of persons, a team, very serious about what they do. While this individual and this team, Yelp, it has been precisely the opposite. This is why I've been always having a bearish long-term view about Yelp after the company or the shares, they reached the $90 plus, because at that price everything, the perfection, it was priced in. Nothing could at that point come in and to surprise investors in general other than hype. And when you have this news on the web about the potential buyout, this is all about hype, regardless of whether it is going to happen or not. The fact is that this, I repeat, it helps all those that they have a position in Yelp to be bailed out. Instead of selling or being forced to sell shares at 39 or 37 or $30, they are going to sell them at 50, 55 or whatever, all right? Because they are allowed to do it, and no one does anything about it. So in the end, this had also a very important return on investment for all these market participants, and this appears to be legal. And the interesting is everything it is legal. It is done as there is a magic formula, and they are quite happy then, helping each other this to happen. And so this is not about what Yelp is going to say next earnings announcement, or what the company is going to do within 1 or 2 years. This is all about the present. What matters, it is the present, okay? And right now, what they do care about is to support the price of Yelp the most they can, to continue with the momentum and to sell the higher as they can, all right? This is the proposal or the objective of this announcement that was made this week.